Hello everyone, welcome to the Ichimoku charts.com daily analysis for the US dollar index for Monday, October the 4th, 2010. Well, a change of character for the market today, and we had previously a fairly large red-bodied candle making a lower high and a lower low and testing support at 78. Today the market opened up just below the previous close, with the market maintaining the downtrend with a lower high and a lower low, but we had a fairly large green-bodied candle in relation to the previous candle, and that means that the buyers have made some decent net bullish progress on the day between the open and the close, and that's really out of character with any trading that we've seen for quite some period of time, for pretty much the whole of the last month. So that could be significant for a turnaround in the trend in this market. Now, in Japanese candlestick terms, this is a potential reversal pattern, and it's a piecing pattern. And that's when we have a downtrend in place. We have a fairly large red-bodied bearish candle on the previous day's trading. We have today's trading opening down below the bottom of the body of the previous candle and closing up above the midpoint level of the body of the previous candle. So that's a piecing pattern. Now, we haven't had a change of trend yet, and we do need confirmation of that change of trend. So confirmation would be a candle with a higher high and a higher low. So there is potential for that. And the reason that we do have it is a potential change of trend or a potential reversal pattern is because of the fairly large green body that's traveled more than halfway through the body of the previous bearish candle. So it means that all of that large amount of bearishness that the market had has evaporated, and the bulls are attempting to take control. Now, looking at the Ichimoku charts, we're trading down below the cloud, so we have an overall negative bias in this market. We're also trading below the Kijun-sen and Tenkan-sen, so the market is bearish in medium-term and fast-term timeframes. And looking at the Kijun-sen, it's turned flat. And quite often when it turns flat, it tends to be an attractive price action. So that adds some weight to the potential for a change of trend to the upside. There is a good chance that the market will change trend. Now, on the way up, if the market does trade up, then we do have potential resistance up above at 78.94, and then certainly at the Tenkan-sen at 79.23.5. And quite often when markets have been trading to the downside with strong momentum, the first area that they'll find resistance will be at the Tenkan-sen. And we can see how strongly that Tenkan-sen is pointing down, reflecting the strong downside momentum. So we should watch that area, certainly the 78.94, and then if that's breached, the area at the Tenkan-sen for any potential bearishness coming in if the market does interact with that level. Just above there we have resistance at 79.5 and then resistance up to 80.4. Obviously the 78 area, which has offered support, will be very important for the market over the next day's trading. If that's taken out, then there is strong potential for the trend to continue down and for there to not be a reversal from this piercing pattern. Therefore, we do need to watch the high of the current candle as well as the 78 region, and look for a potential higher high and higher low and test of the areas above.